Trump's economy takes a hit. Jobs report reveals weakness, raising questions. Imagine waking up to a reality where the economy is on shaky ground and the numbers just don't add up. This is exactly what happened on a fateful Friday when the July jobs report revealed a staggering truth. The labor market had only gained a mere 106,000 jobs over the last 3 months. The news sent shockwaves through the economic landscape, leaving many to wonder if President Trump's tariff regime is to blame for the slump in hiring. But here's where it gets controversial. The report from the Bureau of Labor Statistics, BLS, suggested that the economy and labor market are much weaker than previously thought, sparking heated debates about the effectiveness of the president's economic policies. And this is the part most people miss. The combination of the dismal jobs report and rising inflation raises disturbing questions about whether the economy is heading into stagflation, a phenomenon where unemployment rises alongside prices. The very thought of it is enough to make your head spin. Trump's response to the report was nothing short of furious. He fired BLS Commissioner Erika McEntarfer, accusing her without evidence of politicizing previous BLS reports. This move has cast a dark shadow over the credibility of future jobs reports, leaving many to question whether the numbers will be politicized and inaccurate. The markets reacted with a resounding thud, marking their worst day drop since May. The Dow Jones Industrial Average plummeted 542 points, finishing down 1.2% on the day, while the S&P 500 lost 1.6% of its value, and the tech-heavy Nasdaq Composite fell a whopping 2.3%. As the president fumed over the poor economic news, he took to Truth Social to express his discontent, claiming that jobs numbers were rigged to make him and the Republicans look bad. But is this really the case, or is it just a desperate attempt to deflect blame? The economy added a mere 73,000 jobs in July, falling woefully short of economists' expectations of around 100,000. More significant, however, were the massive downward revisions over the past 2 months. The economy added just 14,000 jobs in June, after the number was initially reported as 147,000, and a paltry 19,000 jobs were added in May after initially being reported as 144,000. The combined revisions showed a staggering 258,000 fewer jobs in the economy. The Labor Department described the revisions as abnormally large, citing new information that had come in and pointing to employment levels in the state and local government education sectors. Trump's response to fire the head of BLS raised major red flags from economists, who warned that reliable economic data is a key strength of the U.S. economy. "This is awful," said Harvard economist Jason Furman, who chaired former President Obama's White House Council of Economic Advisors. "I don't think Trump will be able to fake the data given the procedures. But there is now a risk, plus an awful appearance." White House economists admitted that the numbers were bad, but pointed to anomalous factors related to seasonal adjustments. However, Harvard economist Jeffrey Frankel, a former member of the National Bureau of Economic Research's Business Cycle Dating Committee, told The Hill that the previously reported jobs numbers stood out to him more than the revised numbers, which he said make more sense in the context of tariffs and a broader slowdown. "The consistently strong numbers that we thought we had previously were the anomaly," he said. Market participants expressed similar sentiments throughout the day, with Zacks Investment Research senior market analyst Mark Vicker saying that the labor market is looking much weaker than we knew yesterday. The White House has been leaning on Trump's tariff plan as a policy that will turn around the U.S. economy and create revenue and jobs for the country. But skeptics of the president's tariff plan have already predicted that this year will be one of pain for the U.S. consumer, with companies passing off the cost of high tariffs to customers. That, in and of itself, is a recipe for slower economic growth and higher prices, and that's what he's got. said Douglas Holtz-Eakin, president of the center-right American Action Forum. The messaging out of the White House has been that more goods can be made in the U.S., minimizing the dependency on foreign goods. But the jobs report on Friday showed the manufacturing sector losing 11,000 jobs in July after shedding 15,000 in June. "We're certainly not seeing a manufacturing renaissance," said Monica Gorman, former special assistant to President Biden for manufacturing and industrial policy. At this point, the data is showing the opposite. Trump also lashed out again at Federal Reserve Chair Jerome Powell, urging the central bank board to wrest control from him. Such a move could dramatically shake markets, and many forecasters have predicted that the Fed will move to cut rates sooner, given the newly apparent weakness in the job market. The economy is in the middle of a gradual slowdown that's been going on since the soaring recovery from the coronavirus pandemic, which was bolstered by trillions in fiscal stimulus that's taken years to filter through the economy. Gross domestic product grew by 2.9% in 2023 and by 2.5% in the first half of last year. In the first half of this year, it grew by just 1.2%. On top of that, prices are starting to rise from tariffs, creating potential stagflation. Prices from personal consumption rose to a 2.6% annual increase in June, while the Labor Department's Consumer Price Index rose to a 2.7% annual increase. Businesses are sounding increasingly worried about normalizing the new U.S. tariff levels, with the National Foreign Trade Council warning that institutionalizing the highest U.S. duties since the Great Depression will ultimately make American businesses less competitive globally and consumers worse off. So what do you think? Is the economy heading into stagflation, and is Trump's tariff plan to blame? Share your thoughts in the comments below.